what I'm looking at is through the lens of an accountant and through the lens of finance. And I've built and scaled and exited an accounting practice, which has been very important in terms of the positioning of neoeco. And neoeco is a sustainability and intelligence platform. Really, it's the connective layer between finance and sustainability. So it's borrowing from both worlds.
So today we're here to talk about something we can both get incredibly passionate about: sustainability and ESG. More importantly, the role that accountants can play in this space going forward, and bringing a lens on what neoeco's proposition is and why it's such a unique position to be in comparison to other software providers that are out there. Before we get into that, I think it's worth just talking a bit about the current geopolitical situation and where ESG and sustainability sit in all of that. There's a lot of myths out there. Equally, there's a huge amount of opportunity. So I'm just wondering, Steve, what's your perspective on that?
Thank you, Dan. It's a really interesting question, and there's a lot of noise at the moment going on in certain parts of the world, and actually globally, with very different messages about sustainability, and the right course to follow. It's that question of regulation or not, and actually whether the headwinds are that regulation is going to be driving a lot of the changes here. Particularly thinking about the CSRD in Europe and the ISSB IFRS standards, which have been adopted by, I think, over half of the global GDP is now committed to those standards. So there's some significant momentum in terms of the appetite in sort of, I guess, the macroeconomic climate, but equally, there is a lot of pushback as well, and we've seen that in the US, and we've actually seen that a little bit in Europe as well in terms of the rollback of the European regulations. And I don't actually think that's because there's not an appetite for it. I think it's more because they just went too far too soon and made things far too complicated. But there's a rebalancing that's happening now, and I think the ISSB IFRS standards that we'll probably dig into a bit more detail today are pioneering that, and I think that's really something to get behind in terms of that. But I think more broadly, what I find super interesting is the decoupling of economic growth and having low emissions. And I think that's the crux of it. I think there's this myth out there that to be sustainable means that you have to ignore your business case, that you have to somehow sacrifice profitability and somehow think differently and put your business at risk by doing that. And that it's just this extra cost that you're going to have to bear. And, there's no business case for it. But, there's plenty of stats that I've seen, one of them being that since 2023, I think the global economy grew 3%, whereas emissions only grew 1%. And also I think since the 1990s, just the EU alone, it cut emissions by 37%, yet the economy grew by 68%.
Right.
So, what we're seeing is a complete disconnection of that myth that we can reduce emissions, we can be sustainable, and we can still drive economic growth, and there's a good business case for it. And also applying that to to capital and allocating capital. I think it was a Morgan Stanley report in 2023 that looked at their portfolios, and I think the sustainability funds outperformed their other funds. I think the sustainability funds were at 12.6%, compared to their 8.6% baseline. Right. So even from an investor perspective, there's a business case. And outperforming certain industries, so I find that super interesting. But we can get even more granular than that and look at this in operations level. Dan, what have you seen in that perspective from a business case?
The common perception for this space is that it's emerging and perhaps not as significant as some already think it is. So I've seen a report recently published by CBI that basically set out the economic reasons that ESG is really working, the net zero economy is really working in the UK. So quite often people associate net zero with additional cost. It's increased legislation for businesses. It's going to cost business more. It's not something where there's any opportunity to be had. When in actual fact, since 2023, the UK net zero economy has grown by 10.1%. At a time that we've been pretty much flatlining in terms of growth, 10.1% seems like something that we should be really embracing. And when you consider that we're not fully leaning into this yet, there's still the hesitancy around, is net zero the right way to be going? Is ESG really a good thing to be embracing? But actually, that's clear evidence that this is a huge opportunity. Businesses in the sector already contribute more to the economy than the the advertising and market research industry, more than the animal and food crop production industry. So it's huge and we're not embracing it yet. So I think the business case is really clear. The more we lean into this, the bigger we're going to grow. You look abroad and think about some of your comments about the EU, but looking slightly more east. In China, perhaps not a country that we typically associate with being particularly environmentally friendly, they're seeing this as a huge opportunity. So they're now responsible for 74% of all battery production. They invest way more than, I think it's something crazy, like 6 times more EVs than the EU and the US they're producing. They invest 3 times more in clean energy than the US or the EU. So they're really leaning into this. They're one of the world's largest economies. They want to be the largest economy. They see this as the opportunity to go and grab. Yeah,
super interesting that these nations, and India as well is another country that is taking this very, very seriously, a major economy, but it's these countries would have looked at this in great detail and would not be making these decisions if there was not an economic benefit, because it would have, kneecapped them politically. So there quite clearly is a business case for this. But why is it that you think that people, particularly, I think particularly people in the UK, don't see that or feel that it's a cost, or it's too difficult, or it's something that they shouldn't worry about?
I think we've suffered from this perception that this is something that's fluffy over the years. I don't think there's been a close enough link between the business or the benefit to business and the drivers that they're really feeding into. So there's not been enough of a connection between finance and investing more in sustainability, ESG related things within a business. So that's one reason. The political noise doesn't help from some certain individuals, but I think people need to start looking through that, because it's really obvious that the opportunity is there. And I guess really this is why neoeco came about. I don't know, do you want to talk to us a bit more about how neoeco was founded, the reasons that you thought there was a gap in the sustainability space? There's obviously a lot of software out there that's emerging. So why neoeco? What was the thing that you saw that you thought this really isn't being dealt with?
Yeah, interesting. neoeco, I guess the founding story, it was actually born out of a little bit of rivalry between me and my brother back in a few years ago. So obviously, me and my accounting background, I was building and scaling an international accounting practice, and the reporting standards were obviously very close to what I was working on and doing day in, day out. And my brother he's actually leading academic in what's called the life cycle assessment methodology, and has a PhD in rare earth materials and environmental impact. Very relevant to China and in sort of what they're doing at the moment. But what he was doing was super interesting. He was working on very complex life cycle assessment models and methodologies. And what life cycle assessment is essentially, it's a way of measuring impact at different phases of a product life cycle, from production all the way through to processing, manufacturing, distribution, and it can even be sort of the end of cycle in terms of a product, and measuring the impact at each of those stages. But when you're doing that, you're getting really, really granular with all of that data. And I found that really, really interesting. And what it also does is it's not just looking at carbon in isolation. So when you're doing an LCA, all of this I had to learn, an LCA, you're looking at 100 plus impact factors. It could be acidification, eutrophication, water usage, land usage, like anything that has an impact can be quantified and tagged to a transaction or a process. I found that really, really interesting. But what got lost was that world and the financial reporting accounting world. It was not there was a complete disconnect between the two. It was two sides speaking a very different language and not connecting that. And what I was seeing in the market was the emergence of the accounting standards. So the adoption, the IFRS S1 and S2 was starting to be talked about and published around about that time. And what that meant was that became a problem for an accountant to solve, in my book, in that these disclosures and what the work of people that were doing was going to end up in the financial statements and be audited and be validated in the same way that financial data and other disclosures are within the financial statements. But the worlds didn't talk to each other. And the world of accounting did not understand the world of LCA and sustainability, and vice versa. And it was a very disconnected, siloed workflow. So we started looking at other solutions in the market. There's a lot of carbon calculator type platforms out there that just focus on carbon and do that very well. But we found that they were quite SME focused and quite light, very, very light in what they did. And when we did our early models of our methodology compared to these, there were orders of magnitude out in terms of the calculations. Because they're very survey based, you have to put very high level data. They use high level average impacts. There's a lot of self-assessment, and it just doesn't really cut it when it comes to having that precision. And that bothered me. Having precision to measure something as an accountant is pretty important, and being able to verify and audit that back to a transaction. There was no solution out there that we could find that did that. And what we decided to do was to solve the problem the other way around. So instead of trying to solve the problem of taking LCA data, say, or sustainability data and putting it into these frameworks, we say, look, the financial ledger, the financial systems are the reporting boundaries for an organization. They are that closed loop, trusted, auditable system. We already have it. So let's build on top of that. And so we decided to get to work building a solution that used the intelligence of life cycle assessment, which is the elite way of measuring impacts. Just as an example, my brother works with companies like Tesla. So the stuff that you see on their website in terms of their product LCA, their cars, he would have done that. So we're using exactly the same methodology in the engine to report across accounting ledgers, to then report across standards. So that disconnect was the challenge for us that we wanted to solve. And sort of over time, we sort of prototyped and developed and tested and figured out how users were going to use it. And one of the things that we came up with, which really defines what we do really well, is the financially integrated sustainability ledger. And that's the thing that joins everything together. So you have your LCA data, say, and an engine that does impact calculations. You have your accounting transactions. You're essentially tying those together with smart AI and sort of complex impact calculations and databases to create this unified, trusted system of record which you can then use for whatever purpose you want to do in terms of disclosures, for KPIs, for measurement as a management tool, or for other interesting things like trying to reduce your insurance premiums or present data to get cheaper capital or to access green finance. The real concept behind financially integrated sustainability management is that unified ledger that provides flexibility for outputs, essentially. And so that's the driving force behind what we want to do. We're essentially building the connective layer between finance and sustainability.
And that must be really helpful in developing the business case as to why a business needs to start reporting, measuring this kind of information. Some of the more commercial outputs that you get from it leading to reduced insurance premiums and so on. Is that what you tend to use to shape the business case as to why people need to be involved?
That's right, because you need business context for these decisions, for the conversation to escalate to the boardroom. You know, they may well be eco-conscious or sustainability conscious and have the right intentions, but they're still going to ask, well, how does this decision impact my P&L? Where can I find this on the balance sheet? What does this mean to our cash flow? What does this mean to my share price? Everything, unfortunately, still in our system is going to tie back to that. And so to surface that kind of data, you need a financially integrated solution to be able to do that. You need to be able to map accounting transactions to your sustainability data points and measure them in context, but at a level of detail that is actually provides relevant information to be able to make decisions, essentially. But yeah, it's that way of structuring data, like a P&L or a balance sheet, but for non-financial data points, that gives you the context to be able to make a business, to create a case that there's a business reason for doing something, essentially.
Yeah, and I guess it's that concept and being able to build the familiarity and the harmonization of sustainability data or carbon data or whatever it is that you're measuring and financial data. That really needs to be understood by a particular type of person in a way that they can present it in an understandable manner. So is this where you see the use of accountants coming in?
Very much so. So obviously being an accountant and former auditor myself, the whole neoeco platform is very much built and feels like accounting software because our hypothesis was that it's going to be accountants that will stand up and take responsibility for this. It's something that the accounting professions, certainly ACCA and ICAW, have been pioneering for a few years now. And I'm starting to see, I understand some of this is feeding its way into exams and things like that. So this is something that's very, very important. And it's not just me that's thinking that there's this shift here, but ultimately we've been given this mandate because of the regulations. And so the people that have the skills that are best equipped for this, in my opinion, are the accountants. This data needs to be audited and validated. Who best to do that? This data needs to be structured, needs to have certain controls in place. It needs to link to the elements of the financial statement. Not necessarily the accountants don't need to be the subject matter expert, but it's the case that we do in our everyday lives anyway. We control a process, and then perhaps we need a lawyer to come in to help us with something. Perhaps we need someone to value these buildings or these assets for us that we can to do a very specific discounted cash flow modeling on a particular type of asset. Like we bring in people, we're very good at doing that, but the infrastructure and the framework and the process and where the data needs to end up is very much in the remit of the accountant. And front and center of neoeco is that it is essentially feels like an accounting solution in that we're talking in terms of ledgers. We're talking in terms of reconciling data and information, creating reporting outputs. We've got controls and processes and audit trails. All of these things super important. And I think when we talk about setting ourselves from other ESG software solutions, that will be a fundamental part of it. Not just the LCA engine that we're built on, or the fact that we use AI smarter than anyone else in the market. It's the fact that we are built for accountants and for assurance and verification and future-proofing that, and also future-proofing ourselves against changes in regulations and standards. So you start with a ledger. You have a ledger. You can mold that into whatever you want. So that's kind of our purpose.
It just makes sense, doesn't it? I think if you need someone that understands how to get data into a system, but more than that, understand the process of where has that data come from, and really think about the auditability and audit trail of a piece of information, which then builds the reporting and the information that people are going to rely on to make certain investment decisions, or whatever it may be, customers deciding whether they're going to purchase from a certain business or not. You need to be able to have trust in those figures, and accountants do that day in, day out. They understand that. And I guess with the legislative aspect, we're not exactly new to having to understand the impact of legislation that relates to financial statements on a company's set of financial statements. So it's something we're very familiar with.
I was going to say, just on that, Dan, I'm just thinking where, as an accountant that's launching an ESG solution, where do you see that role going? And how do you see one, I guess, from a Kreston Reeves perspective, but equally, what do you think is going to happen to the industry, over the next 5 years as this starts to gain traction?
Yeah, sure. So I can, similar to what you were saying around we bring in experts, we understand that accountants are not going to be the saviours of our planet on their own. This challenge is so big, thinking beyond the business aspect and going to the higher level, what we're actually trying to achieve is fighting against climate change and building a more equitable and fair society. You're going to have to bring in specific people that understand that stuff. You've got the climate scientists working out the technical details. You have the software providers like yourself creating the platform for us accountants to essentially be able to interpret data and provide valid recommendations to clients from a holistic business sense. So simple things like financial analysis and combining that with carbon data. The simplest example I can give is from a conversation I had with a client recently. Said, Dan, I don't know how to get people to stop printing. I spend so much money on my printers and paper and ink, etc., etc. They're spending £100,000 a year on printer leases. They weren't even printing double-sided. That was the first obvious. Just print double-sided. The other is they had several sites. Why don't you just halve the number of printers across those sites? You might annoy a few people to start with, but it's behaviour change. You've saved yourself £50,000. You've also reduced your emissions and your environmental impact. So I think accountants are able to think about this stuff in that kind of way. So it will bring an entirely new perspective to ESG reporting, financial reporting, being able to really harmonise the two into something that management at board level can use.
Yeah, I love that. That's really interesting context, and it's quite powerful when you can put a pound sign next to an impact reduction.
Yeah,
and again, it's demystifying. We talked about it at the macro level, but even at an operational level, there's decoupling to be had at that point, and I think that is something that is in the market is fairly misunderstood. And I think there's obviously some education to be done around that. But I guess it's from my perspective interesting why, as an accountant, is sort of I guess you've spoken to it a little bit, but choosing a financially integrated sustainability solution something that's important for you.
The auditability and the accuracy of the data. I think what we see from our own experience and from having spoken to so many different providers is that you don't get the benefit of being able to literally attach a carbon emission factor to each individual transaction. It's always grouped. And then when you think beyond that, how can you then pull out the data to properly categorize how much is being spent by supplier? How's it ever going to be feasible to reduce emissions when you can't have that level of granularity? And then how do you audit that? Because if you're just grouping transactions together and saying that'll do, I can just foresee there being major issues when an auditor gets to that down the line and legislation dictates that it needs to be audited, them saying, well, we don't agree with this estimate, we don't agree with this assumption. So for us, it's really being able to have that granularity of detail and being able to see where it goes.
And in terms of neoeco, what was it that sort of made you, I guess you sort of choose neoeco to partner with over the other solutions?
So many reasons, Steve. I'm going to flatter you a bit, but I would say that you are one of the reasons that we partnered with you. Being able to have an accountant developing the software from an accountant's perspective, you've really developed something that is usable for us to provide something to our clients. It's an enabling tool. So that really stood out for us. I think it's great that you've had so much experience internationally already. Obviously, we've spoken a lot about legislation that might come to the UK, will come to the UK, but you've already had the experience and some of the challenges of that overseas, and being able to support us in our journey as we're supporting our clients in understanding what legislation means to them is of vital value as well.
So how are you thinking about your services to your clients going forwards in terms of ESG services? What kind of things will you be offering? What will you be talking to them about in terms of value add?
So I think carbon reporting is an easy thing for people to understand. So I think we've reached a position now where people understand there's different scopes. They're already going to a consultant to prepare that and perhaps aren't having the best experience because as I've said, all the burden sits with them to gather the data, so we can instantly make that process far simpler. But thinking beyond that, the only way to create a better business, to think more climate positive, is to have an engaging, incorporated process with various stakeholders. So where we'd look to provide something slightly different from the basic compliance report is, let's have an interview with several of your key stakeholders. And I'm not just talking about someone on the management team, a staff member. Obviously, we'd love to do that because you want to get everyone's perspectives. But let's speak to some of your key customers, because have you had a conversation with them in the next 2 years? Are you planning on next year? Are you planning on sending us a questionnaire to request various bits of ESG data that we have no idea about? If we can have that conversation with them and draw up what's important, then you can begin to create a package for a client that makes good business sense, because they're going to be ready for what their key customers are asking them for. So we can start that engaging process as opposed to just, here's a report. That's all.
And I know you've had some early conversations with some clients and prospects just to sound out the market. And what kind of questions do people have at this stage? And what are people most interested in? What are your clients most interested in at this stage? And
they want to understand what the impact is for them as a business, obviously, but they're wanting to really get into, how can we move this beyond just, here's a carbon report? So what are the risks to our business? Thinking from a more holistic approach. You usually get some fairly clued up people within every business that understand sustainability, but they might be struggling to put it across in the right way to their management team. we can just help reframe things that are already there and obvious. It's just not being framed in the correct manner. So thinking simply, if you have a manufacturing company with your one and only factory sitting on a floodplain, have management even thought about what we're going to do when that floods? What's our plan to there? What's the financial impact? That's a very real situation that we've had a discussion with a client on, that actually a lot of their sites sit on floodplains. It's not even on that risk register. It's next 10 years. You just go and have a look at some of the data that's already publicly available. You can see when it's likely to be impacted. So you just reframe it in a different context. And I think businesses just want to understand how it impacts their day-to-day, rather than it being a nice to have, rather than it being a long term.
Interesting. You talk about management teams there, which means to me management information and regular information, and not thinking about ESG reporting as an end of year annual compliance exercise or something we have to tick a box to get a GHG report and let's get it verified. But it's actually embedding culturally into a system of management thinking. You talked about risk registers. If you've got good management systems, you should be looking at those regularly, and sustainability needs to be brought into that. Something we care about at neoeco quite a bit, because with the AI and the heavy lifting of the data, a lot of this data can be surfaced almost instantly, and it means it then becomes a management reporting tool, and you can chop and change it and have your own sort of specific KPIs and dashboard and however you want to visualize data that's meaningful to your company. It doesn't have to go on a disclosure, but it's something that's relevant to you that you need to keep an eye on. But it just puts it in the room. And one of the things that we did early at neoeco is to help some accountants, and I actually did it in my own accounting practice, with the management reports that we sent out. I used to just do a one-pager at the back, sort of a one-click report, which summarised some of the key things and the trends. And it's just a very easy way just to keep the conversation, top of the agenda, or at least, with the same weight as the financial conversation.
It's about finding ways to integrate in systems that already exist, isn't it? So don't go about reinventing the wheel if you don't have to. If you've already got a risk register, why make a new one? Just add the relevant risks, supply chain, the climate risk potentially. Procurement is often an area that you think, well, actually you should be asking from the outset to your suppliers, are you already looking at these things? Rather than sending a new questionnaire and just creating an additional admin burden, just bring it all together and think about ways that you can keep it as business as normal, rather than feeling like some massive task that you've got to go off and do. To make it as simple as possible and part of culture, it needs to be embedded as a way of thinking, exactly like that management reporting aspect. What are you finding at the moment is a typical driver for demand for sustainability related services? Obviously you've had conversations with practices, you've had conversations with individual businesses, some international. I'm just curious to see if there are any common themes.
Yeah, I mean, the regulations have been front and center of all conversations. People are moved by fear, I think, more than anything else, and not being prepared. And this affects people in many different ways. So the regulations that are coming in will affect people personally. So they're at stake. They have to. They're wanting to understand what's going on and wanting to to protect their position and to make sure they're not doing anything wrong. Equally, there's the risk. There's sort of at a board level. It becomes a key topic of conversation. And then obviously the threat of fines and things like that, and not going on some sort of blacklist, and of course that then impacts reputation with and that has a ripple effect on share price. So regulation seems to be driving most of the conversations. We are very industry and actually jurisdiction agnostic in terms of the solution, because we again uniquely map to global databases. We have tens of thousands, hundreds of thousands of data points within our database mapped very specifically to different regions as well. But what we're finding is where the regulations have come in, that's where the draw is. So we're actually quite active in Australia at the moment and Singapore.
Yeah.
And that's where the regulations, have come in already. So just to give a bit of context to that, there's some regulations coming in we think January next year around the UK sustainability reporting standards, which will be aligned to the ISSB framework. Australia's already adopted those. And so it's actually quite good because we're seeing a little bit of a wave of what to expect and how people are adapting. And that's going to start gaining momentum, I think, towards the end of this year. I think personally, in the UK, when things get actually announced.
What have the challenges been with that implementation? I was aware that Australia was quite a first mover, so they didn't really have anyone else to follow in that space. They were the people saying, "We're going to set the example. Come and follow us." There must have been a lot of challenges for business.
I think they were looking at Europe actually. They were looking at how Europe were doing it, and they also there seems to be the sentiment in Australia that they feel a bit behind in how things are done, but they're not. I always think of the cloud accounting. They were way early to adopt on a lot of the technology, and they've done it again, sustainability. So they're actually further ahead than they think. They've just got stuck in, I think, and I think the feeling I think there is that they just try it for the first year, and there's not going to be too much scrutiny on it. It's just get started, get moving, and do something. What has I think what Australia and what the ISSB has got right is that they've just focused on climate really, whereas Europe said chuck it all in, do it all.
It was too much,
and it's too much too soon. And it backfired. And they just overstepped the mark. And I think we have the benefit, the UK has the benefit of seeing that. Australia would have looked at that and thought, this is, we're going to monitor this. But it seems to be widely adopted. It's been taken obviously very, very seriously. It has to be. And it's been, from what we've seen, because it's focused on climate, it's been a little bit of an easier adoption. It's, the GHG accounting is a well-established framework. And to be honest, a lot of those companies have been doing it voluntarily already because of the size. And that would be the same for the UK. The first slither of companies will probably have already been doing a lot of this work, albeit through spreadsheets and manually and, a horrible process, but they would have been doing it. So they would have been familiar. It's just they've got to take that and then disclose it in a different way, basically.
So one thing I'm really interested in with the legislation aspect is obviously the potential danger with legislation is that you then set the new benchmark for what reporting is required of businesses. So those that have already been voluntarily reporting kind of lose their competitive edge. So do you think it will push on businesses to think about what's next to keep that competitive edge? Or do you think that will just be the accepted, this is where we stop now?
I do not think that. I think you're absolutely right. Like, people are always going to want to do more. And actually, mine goes back to what's happening in the US, whereas Trump said, let's put a hold on this, whereas a lot of the other states went even further on it to prove a point.
Well, they have multiple different standards coming up in different states.
Exactly.
Now, don't they?
So I think people will try and push back and stand up, because the people that did it voluntarily did it because there was a business case. And I think you're right, they did it to stand out, and they're going to have to do something else to stand out. But sustainability is very broad. It's not just climate change. And I think that's another one of the myths that we need to break down. And one of the hypotheses of neoeco is that you can't make a decision in the context of climate change if it's going to impact slavery in the supply chain, or it's going to impact acidification or land use or water usage somewhere else in the supply chain. It's, you've got to have a more holistic and contextual view of impact, not just climate change. So, I think more naturally as the industry matures, it will expand out. And I think the eventual reporting will be double materiality based on the European framework. I think that's where we will be in probably about 20 years.
Just to clarify what double materiality is for people that don't understand? Do you want to explain?
Yeah, so for accountants, materiality will be familiar because it's looking at a threshold of transactions that you need to validate, essentially, in a nutshell. But when we're thinking about materiality and double materiality in the context of sustainability, we're looking at an inside-out view. So what the company reports and what they think is material in terms of their financial and sustainability-related impacts. So climate change might be considered a high-impact area. Biodiversity might be considered a high-impact area, depending on, the activities within the business and the type of industry that we're in. So that's one lens. So that's the sort of the single materiality element. But then the double materiality is taking an outside-in view of assessment. And what that means is typically it's discussing with your stakeholders or gathering stakeholder data. But our approach is using open source intelligence to gather that information to create an automated outside in materiality assessment module. But it's essentially combining the two assessments of what the world thinks is material about your business and what you personally think is material about your business, and coming up with some sort of overall, okay, well, this is actually what we need to be reporting on and what we think is material to the business. And what is material is something you need to report on and disclose, and the standards basically tell you how to do that.
And that's a very big change from, or a very big leap from what ISSB is saying with S1, S2, because they're saying we're just going to focus on what's financially important to a business and ultimately taking more of an investor lens, I suppose, rather than wider society's perspective. Thinking beyond legislation, how do you see the future of sustainability and accounting evolving over the next 5 years?
Yeah, I think continuing on that point, I think that the standards will expand. I think we'll see global adoption. In my views, we'll see global adoption of the ISSB framework. I think everyone will be eventually reporting to that, because what needs to happen is a convergence and one single source of truth, one single standard. And I mean, there's already a lot of crossover between that and the European standards anyway, so they're not too far apart. But I feel there's going to be a convergence there. I think, again, the standards will expand. Again, like we talked about, I think they'll expand beyond climate change, because climate change might not necessarily be a material impact for all businesses that have, once you've solved that problem, what other problem are you causing for the planet? And I think there's going to be this constant loop of reevaluating what sustainability is, and what there's could well be potential other issues that the planet faces. I remember how many years ago that the ozone was an issue, and that doesn't get talked about anymore because I think that's perhaps sorted itself out, although I'm not sure. And then, there's other things that crop up, and, we don't know. There could be another health crisis again. So, I think that it will evolve, and I think, what stands still in all of that are the sort of the foundational skills that accountants have. And if you've got a flexible enough solution to sort of mold with the changing landscape, then that's the sort of center of gravity for that constant.
I think stakeholder demand is probably only going to increase as well. I mean, the generational shift that we're seeing, there was a very recent Deloitte study. Just over half of Gen Zs and millennials researched the environmental credentials of a business before they took up employment, and 17% had left an industry or sector entirely because they didn't agree with what was going on. They got into the business, they realised that actually it was really damaging to the environment, or the business was just blatantly greenwashing, and they've left. So I think we're only going to see that increase when businesses realise there's a lack of succession because they can't keep employees happy. The way that they're going to be able to keep them happy is to start leaning into ESG principles more. So demand's only going to increase.
Yeah, I totally agree. And I can just see that just from the accounting profession, and the fact that there's more being done to attract, new graduates new trainees in,
Yeah.
and they're doing that through sustainability.
Yeah.
And they're trying to, there's a repositioning a little bit, rebranding of the profession, I think. But it's quite rightly so.
I think it's thinking about that as a huge opportunity for the profession. We see the change in the ICAW qualification, ACA releasing a new syllabus where sustainability and climate change is going to be a fundamental part of what they're teaching. And I think at a time when accountancy isn't necessarily seen as being a sexy profession for people to join, it's not something that people can typically get excited about, because they think of just someone sitting there with a calculator counting their coins and working on an Excel spreadsheet. This provides an opportunity to create a career for people that ultimately feels like it's got more impact, and it does genuinely have more impact.
Do you think that every accounting firm in the future will be delivering ESG services as they do year-end accounts?
I struggle to see how they won't. You already look at what's going on, and it's an emerging service in many firms. I think many are just dipping their toe in the water at the moment. The stakeholder demand for better information, the desire to make sure that technology is embraced and move away from this typical kind of consultant Excel approach is only going to be driven further. If and when the UK adopts IFRS S1, S2, you instantly have a legislation requirement that dictates these disclosures need to be in your financial statements. Why wouldn't an accountant prepare that? It's financial statements. It's something that accountancy professions delivered for years. So absolutely, I think it's something that all professional services practices are going to be delivering in the future.
And what do you say about the sort of the consultants and other sort of, I guess people working within sustainability? Do you think their role will change, or do you think that?
It's an interesting question. I think that the people that have already been there for years obviously have a wealth of knowledge and experience. I think that we need to make sure we embrace each other's skills, because neither accountants nor existing sustainability professionals should be fighting for the same work or fighting against each other, saying we're better than you altogether. I think it's a different perspective. I think that an accountant's skill set, like we've discussed throughout this discussion, is different just because of the way that we've been trained. It's what we're used to. So I think we'll see far more collaboration in this space. And I think that the collaboration is what we're going to need to be able to ultimately make the huge change that we also desire. So what about you?
Yeah, I mean, I find it super interesting. Obviously, I feel there's going to be a bit of the merging of roles a little bit. I think there's a lot of consultants that are trying to do what accountants are brilliant at.
Yeah.
But there's space for lots of people here, and we need multidisciplinary. The more minds, the better. The more diverse minds, the better.
Yeah.
To solve this problem, it needs to be very inclusive in that respect. But just from an accountancy lens perspective, I think we've already talked about this, but the role, is slightly crossing over into sustainability, or at the very least, being upskilled on sustainability. I think more than anything, they already have the skills. There's not extra skills. It's just applying
new knowledge
and applying, using skills to apply that knowledge.
Yeah, it's interesting. I think we'll see far more integration of roles. But ultimately, the key thing that sticks out in this space is that everyone's really passionate. And I think that when you're passionate about something, you'll continue to find a way to carry on being involved in this space. And what's the next thing? How can I drive further? How can I contribute more? So I don't think we'll see some mass kind of all the sustainability professionals already there disappear because accountants are coming. I think we just need more people to spread the expertise across businesses and make it more relevant. So why Steve, do you feel that Kreston Reeves is a good partner for neoeco?
Yeah, we've been thrilled to partner with Kreston Reeves, and it's really refreshing to have a really forward-thinking firm that gets it, that really understands and wants to understand, and and can see the future how we see it. The sort of the shared values, shared vision, and yeah, I think for us, it's a really good milestone in terms of a landmark moment as well. I think because it's really going to be a statement to the accounting profession of what the future holds for them, and how to do it. I think like I said before, Australia is starting to go forge ahead, and the UK needs to really stand up now. And my passion, being an accountant, having worked in accounting firms, having built an accounting firm, having worked very closely with ACCA, I still think accountants can save the world, and I think Kreston Reeves are pioneering the very same philosophy and building something special. And really excited to be on this journey with you and Kreston Reeves, and make a real difference.
Great. Obviously, we've been speaking a fair while now. I'm just wondering, what's your one big idea or call to action that you'd really like listeners to take away?
So I'd say you don't need a lab coat or to be a PhD expert to lead on sustainability. You can be an accountant. I think what you need is a ledger or a system that you can trust, that can surface the information that you need, and you need an advisor that you can trust to lead you through it. And I think that's where neoeco comes in. And I think that's where Kreston Reeves come in as well in this solution.
Couldn't agree more. I think the one thing I'd like people to take away is that there is an immediate business case for businesses to embrace sustainability. Don't wait for the legislation. Even though it is coming, I think you'll be at a point where you're just doing the minimum and you're unprepared. So make sure you are a leader, because it all just makes sense. It's attractive to customers. It will open new doors to new markets. It's attractive to employees, investors. There's no reason. The stats are out there that show this is the thing that you need to be embracing within your business, and growth should follow if you embrace it in the right way. Thank you for your time today, Steve. It's been thoroughly insightful, thoroughly enjoyed the discussion. I guess if anyone listening today wishes to contact either you or me, then we'll add contact details somewhere in the description, and equally add us on LinkedIn and start the conversation. I think I speak for both of us when we say we're more than happy to speak to anyone just to have a chat. No obligations. We're not going to try and sell. Let's have a chat about what you're up to and ideas and knowledge share, and see how we can support.
Absolutely. Thank you so much, Dan. Appreciate it.
Thank you, Steve.